Tohru Sasaki is head of Japan and rates and FX strategy at JPMorgan, and he joins us now in Tokyo. Tohru Sasaki, thanks very much indeed for joining us. First of all, you were saying we were getting to the point when intervention was coming, and that was on Tuesday. You said that it would happen, but it wouldn't go to 80, the yen. We got over 79, though, so are you thinking that it may go over 80, or do you still stand by what you were thinking on Tuesday?
I still think that it's difficult to go above 80 because there are lots of people who really want to sell the yen near 80, so it's so difficult to reach the 80. And also, BOJ and the Ministry of Finance, I believe they are likely to spend too much money for the intervention, so I continue to believe that maybe 79 high level is a top.
Many people have said that this is all down to general dollar weakness, but you could also say that it's Japanese yen strength because it has been rising of late against a basket of other currencies.
But if we think of the level of the yen effective exchange rate, it is not so extremely high level. If you compare to the other major currencies, there are several currencies which is really strong in terms of the effective exchange rate, even compared to the Japan. So yeah, probably the Japanese yen is a stronger side compared to the average in the past, in long year. But we cannot say that the yen itself is extremely strong. Dollar is extremely weak. That's
yeah, Tohru, I just want to
extremely.
I just want to find out from you, because last time when we had this kind of move on the markets here on the foreign exchanges, that was after the disaster of March 11th. It was the 17th when it was concerted action with other central banks. Do you expect later on today, perhaps the ECB, the Bank of England, or indeed the Fed getting involved with this?
No, this time no, because that time it was because of the after the earthquake. But this time it is not the. There's no specific reason, for the intervention. And also, it is true that the other countries' currencies are suffering the appreciation against the dollar. Swiss franc and Brazilian real and Aussie, all those currencies are also very strong against the dollar. So there's no reason for the other countries to join this intervention.
Right. Do they now have a line in the sand that the Bank of Japan and the authorities there in Turkey? Have they drawn one here, let's say 76.5 against the dollar?
No, I do not believe that they will draw the line. I think that the example of the last year's September, mid-September last year's intervention could be the good example. In the last year's September, they spent about 2 trillion yen and pushed up the dollar yen about 3%. And then dollar yen started declining in a few days, and eventually dollar yen broke the starting level of the intervention within half months. Half months. So I think that this time is kind of same pattern. We will see maybe around 79 for a while, but eventually decline to 73.
Right, 73, that's quite something. So what you're saying is that what you're emphasizing perhaps is the futility of all this.
Sorry, could you say again?
Well, what was the point of doing it if we see yen going down to 73, or up to 73, I should say?
We expected the dollar yen to decline to 73 within next year, 1 year. The main reason is that because of the dollar weakness. Dollar is likely to continue to be the weak currency, even against the yen. So that's why we expect that the dollar yen to decline very gradually toward that level.
Thank you so much, Tohru Sasaki there from JPMorgan.